Hey, welcome back. It's Jason Walter here. I want to make today's video and give you guys an update regarding home prices, housing inventory, new listings, and much more because there's a lot of changes in our housing market right now. So I want to make sure you guys are informed with the latest trends on the housing market right now. So with that said, let's go ahead and dive right into the video. This is according to Redfin. They actually just published this on the 23rd. If you recall from my video I posted a few days ago, Redfin is reporting that their Redfin Home Buyer Demand Index actually had their largest annual decline in over 2 years. Also, the weekly share of listings with a price reduction, in other words, sellers are reducing their asking prices, has reached an all-time high for the 4 weeks ending June 19th. And according to Redfin's Chief Economist, she had this to say: mortgage rates near 6% have put a big chill on demand for houses. So that's what I shared with you guys in a video I posted a few days ago. I also shared that mortgage rates have been increasing. And while we're at it, let me show you the latest from the Mortgage News Daily. So for the Mortgage News Daily, they're reporting that the average 30-year fix is at 5.95%, 15 years at 5.3%, and then also for VA is 5.6%, and FHA loans at 5.35%. And have a look at this because ever since really the end of May, mortgage rates were declining, but more recently they have started to increase. So mortgage rates reached highs we have not seen since 2008 on the 14th of June when the average 30-year was at 6.28%. But then rates declined through the 23rd of June when they dropped to 5.75%. But now they've been increasing for three consecutive days. So in any case, going back to the report here, obviously fewer people are searching for houses for sale on Google. Their home buying demand index has fallen, the largest decline since April 2020. And of course, we're seeing less home tours by real estate agents. So that's not what I want to talk about because that was a separate video, but just kind of want to give you guys a general overview about some leading indicators of our housing market right now. So let's talk more about home prices and housing inventory and much more here. So here's the key market takeaways for 400 plus US metro areas. So the Redfin tracks approximately 400 metros across the United States and reports this on a weekly basis for you guys. And this is for the 4 weeks ending June 19th. So the median home sold price, in other words, the median sold price across the United States, at least for these 400 plus US metros, is actually up 14% year over year to a new record high of just under $400,000. Meanwhile, the median asking price of newly listed houses increased 16% from a year ago and has reached $406,000. And here's two graphics I want to share with you guys regarding median sold prices and also the asking price. Again, I always talk about this, but the median sold price, whenever we're talking about stats that have to do with houses that actually have sold, that's really what the market was like 1 to 2 months ago when the home seller accepted an offer from the home buyer. Also, 1 to 2 months ago, of course, rates were much lower than today's rates. So take these with a grain of salt. In any case, the median sold price in the US, again, reached $400,000. 1 year ago, the blue line right here, the average home price in America was $350,000. So we basically gained $50,000 for an average price home in the United States in one single year. Also compare that to 2020, we were actually just over $275,000. So one thing I want to bring to your attention regarding home prices and also a lot of these stats right now is that we're approaching the summer months. So it would be entirely normal for home prices to decline just a little bit or plateau for the last half of the year. This is because kids are out of school, people go on vacations, and they basically put their plans on hold on buying or selling their houses. And so I wouldn't be surprised if this median sold price starts to plateau or even go down through the remainder of the year. So that's what we call a seasonality in our housing market. However, though, our market right now is absolutely insane, right? I mean, mortgage rates have basically doubled this year. We have this affordability crisis. We're seeing a lot of factors right now that home buying demand is decreasing. So we'll have to see what home prices are going to be doing this year because perhaps we may be seeing some changes in the months to come. However, though, that all depends on housing inventory. More on that here in just a little bit. And here's the median asking price, again, gaining 16% year over year. But as you can see here, over the past couple of weeks, we're seeing this dip in the asking prices. But the levels right now are still far higher than last year. Right now at $405,000, last year about $350,000. But from 2021, which was somewhat of a normal market, I mean, we had this increase in the last half of 2021 because mortgage rates decreased to 2.75% in August 2021. I always talk about this, but that was very near all-time record lows for mortgage rates, and that caused the last half, or basically August through November of last year, for a lot of activity to occur because mortgage rates decreased to near record low levels. That's why in September and August, we saw this increase in home prices during this time, as you can see here as well. In any case, as you guys can see here, ever since May or June of last year, home prices, or the median asking price, was more or less flat for the remainder of the year. So if we have a more normal market, we should expect home prices to decrease or plateau. But if they decrease greatly, of course, that would not be normal. And what we're also seeing right now, because of rising mortgage rates and of course rising home prices, is rising mortgage payments. These are for would-be home buyers. So the monthly mortgage payment on the median asking price home, this is basically the future housing payment for a home buyer looking to buy an average price home in America right now, has increased to $2,500 per month at the current 5.81% mortgage rate. And this is actually up 48% from 1 year ago when mortgage rates were averaging 3.02%. So this is one main reason why we're seeing a big pullback in home buying demand, because we're having this lack of affordability. And look at this. I mean, looking by the average house in the United States, the pool of buyers who can afford to pay basically $800 more per month to basically buy the same house compared to 1 year ago obviously is shrinking. Here's a great graphic depiction showing this giant increase in mortgage rates as well. Again, this is based on current home prices and also current mortgage rates. So right now at 5.81%, a giant increase compared to 1 year ago. I mean, this is so sad to see this. Basically, we started the year at, I think it was about $1,675 per month. And now we're at $2,500 per month, a giant increase in basically 6 months, far higher than 2021, when basically the average monthly payment was basically flat ever since April through the end of the year. And this is basically because mortgage rates more or less hovered around 3% in 2021, whereas this year, the average mortgage rates has basically doubled. And so that's why this is basically flattened. And also in 2020 was also more or less flat. But this year, completely abnormal and not sustainable. Okay, let me give you an update regarding pending home sales, new listings, and housing inventory. So pending home sales, again, that's when a home seller accepts an offer from a home buyer. So pending home sales were down 10% year over year, the largest decline since May of 2020, which is pretty remarkable because May 2020 was more or less just after stay-at-home orders. So we're seeing the biggest decrease in contract signings basically since the onset of this pandemic, which is pretty astonishing. New listings are actually down 2% from 1 year ago, so we're still not seeing this giant increase of new listings hitting the market just yet. Meanwhile, active listings, which of course is housing supply, the total number of houses listed for sale at any point in time, and again, this is for the 4 weeks ending June 19th. So active listings fell 5% year over year, the smallest decline since December of 2019. So here's a graphic depiction showing pending home sales, again, decreasing by almost 10% from 1 year ago. And it's basically been peeling away from 2021, really ever since April. And coincidentally, April was really when the average mortgage rate hit around 5%. So even though in 2021, we started to see this decrease in pending home sales, basically starting in June, that's more normal in our housing market. But this year has been basically declining as well, but declining at levels faster than 2021. Meanwhile, the number of new listings is down 2.2% year over year. It has started more recently to decline compared to 2021, whereas over the past few weeks, we basically were more or less in line with 2021's levels. And I'll say it again, we need to see the number of new listings increase greatly if we want to see home prices decrease greatly as well. However, though, let's have a look at active listings, because this is some pretty big changes here. So active listings, again, are down 4.7% from 1 year ago. However, at the start of this year, as I've been mentioning to you guys, we started the year at basically down 20% compared to the start of 2021. So this gap has basically been narrowing every single week, and we're getting very close to surpassing 2021's levels. Meanwhile, approximately 48% of pending home sales went under contract within 2 weeks. So in other words, the home seller accepted an offer within 2 weeks of hitting the market, or 2 weeks of when they listed their house for sale. But this trend has been declining much more greatly compared to 2021, but we're still well above 2020 levels right now. So basically, half of the houses are selling within 2 weeks, and half of the houses are selling after 2 weeks. Meanwhile, approximately 34% of houses went under contract within 1 week. So basically, 3 out of every 10 houses went under contract within 1 week, which is very, very fast, given the fact that the average days on the market is much higher than 1 week. And speaking of days on the market, the average days on the market, or the median days on the market, is at 17 days right now. But over the past basically 1 week, or the past week or so, this trend has been increasing. So houses right now are selling a little bit slower compared to last month. So basically right now we're approaching levels we saw in 2021, but this trend has been increasing. I'll keep a watchful eye on this to see if days on the market is going to be surpassing 2021's levels. But historically speaking, 19 days or 17 days, I should say, is still very, very quick. In 2020, for example, houses were selling for just over 40 days. Meanwhile, 55% of houses sold above their list price. Again, this is a lagging indicator. So more houses sold above their listing price than they did not. But this trend has been declining really ever since May, which is interesting to see because in 2021, we didn't see this trend line decline until basically the middle of July. This is also an important metric. I'll definitely keep you posted regarding this, but on average, houses are selling for more than their asking price than not. Now, here's the biggest news I want to share with you guys. I mentioned this in my previous video regarding the Redfin's housing market update here, but 6% of listings had price reductions for this 4-week rolling average, and this is by week. So 6%, you multiply that by 4. So basically per month right now, we're at 24% of all listings are having price reductions. I believe the historical averages is around 25 to 35%. So basically we're approaching normal levels right now. But as you guys can see here, ever since I've been reporting this to you guys, really ever since April, this share has been increasing greatly, far higher than 2020 and also in 2021 as well. And I'll definitely keep you posted regarding this because this is telling me that yes, we are seeing an increase of housing supply, almost surpassing 2021 levels. Pending home sales have been declining though, right? So if we're seeing an increase of housing supply, yet we're seeing less contracts signed, that's an indication that home buying demand is decreasing. And also, home buyers are not willing to pay these high home prices because we're seeing this giant increase of price reductions ever since April of this year. And the share of price reductions by week, again 6.1%, is the highest levels since at least 2015 when Redfin started tracking these data here. The previous all-time high was actually 5.3% that was set in October 2019, but now we're far surpassing that and basically moving straight up. Like I mentioned, more houses are selling above their asking price than not, and the average house that sold for this period here actually sold for 102.4% of the list price. What this basically means is that the houses on average are selling for 2.4% higher than the seller's asking price. But as you can see here, ever since May, this trajectory has been declining greatly, whereas in 2021, this ratio didn't start declining until July. And last but not least, here's their Redfin Home Buying Demand Index, which I really love this index because this tells us home buying demand for requests of home tours and also other home buying services from Redfin agents. So if you're a home buyer and you reach out to a Redfin agent, they basically track that. So they actually formulate an index based on that, which is very unique because I'm not aware of any brokerages that track these numbers here. So for example, I'm with Realty One Group in Sacramento here. We act like independent contractors. So if I was going to be showing 100 houses today, for example, my broker would have no knowledge of that. And so they don't track this at all. But Redfin does track this, which is really great to see because really ever since April of this year, their demand index, which again is a tracking of home buying demand, has absolutely been tanking. So starting in April, demand actually decreased compared to 1 year ago in 2021. And really ever since the end of April, this trend line has basically been falling off a cliff, now down 16% year over year. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video whatsoever, then please hit the like button and greatly appreciate that. Hope you guys have an awesome day. I look forward to seeing you on the next video.